This week on London Real, we have the technologist, entrepreneur, and Bitcoin expert, Andreas Antonopoulos.
Bitcoin today is not Bitcoin of 2009. It's growing, it's evolving, it's developing new capabilities and features. We can see a world where the idea of currency choice subverts the very concept of a national currency monopoly. From my smartphone in Trafalgar Square to a Kenyan farmer's text messaging phone, which they can then use to buy seed or stock up a small store. Bitcoin, the currency, is email. It's not the real invention. It's the first application of that invention.
On Sunday, London Real presents Andreas Antonopoulos, Bitcoin.
Criminals were the first to use cars, the first to use phones, the first to use electricity, the first to use every single technology. Fire was probably first used by a criminal.
London Real Academy. Build the best you.
When I go in and look at a person or a business, I want to hear him talk about his dreams.
Am I living in alignment to the way I want to be living? And there's a feeling you get if you're not.
A community of action-oriented people that will keep you accountable to your goals. Sign up now for a free 30-day trial. London Real, sponsored by Bulletproof. I am extremely excited to welcome Andreas Antonopoulos to the show. He is the best in the business when it comes to understanding cryptocurrencies, aka Bitcoin. And while we've had some of the greats in the show, such as Max Keiser, come on to talk about this technology and this currency, I think Andreas has a way that he really brings it home, and he can explain it to, say, the grandma or the super teched out, intelligent finance guy. He's just got a way that he can really bring it home. He's been on Rogan 3 different times to talk about this issue, and he's really made it his mission in life to go around the world and educate people on what Bitcoin means and what cryptocurrencies and the blockchain means for so many aspects. It's really a revolutionary technology more than it is a currency, and we talk all about this. And I think this is an important issue, one that we've talked about in the past, one that we've also talked about on Silicon Real. So it was so nice to have him in the studio. Also, Andreas got really personal about his own struggles with public speaking, doubting himself, and how he really got over a lot of the hate that he gets by just saying what he says, because he really is a lightning rod for a lot of negative energy based on what he has become. He can't even talk about exactly where he lives, and he gets into that, on the show. So I know you're going to love this. It was so glad. I've been working on getting him on the show for almost a year. So typical of London Real, but it's worth the wait. We got him in studio, and it's really a great listen if you want to understand a lot of these issues. And if you want to watch this show completely full, without any pop-ups or any drama, the best way to do it is to click on the link below and go to the London Real Academy. It's free. You can log in with your social media, which makes it super easy. We recognize when you come back. But the real secret is what's happening behind there, and that's the Academy itself. And for the founding 500 members and myself that are a part of it, it's just incredible. It's this network of people all around the world who are trying to make themselves better and who are accountable to each other every single day. And we're trying to really take action in our lives and make things happen, to take our goals, but not let our goals really obsess our entire lives. And so in addition to this amazing network we also have amazing amounts of premium content on the Academy. I've got success secrets from Andreas that you'll hear later today that's only available on the Academy. You could have watched this episode live when it happened on the Academy. We've also got exclusive footage of some of our live events like Dan Pena at the Ritz. I've got the webinars that we do, and we have a lot of other bonus content. And then we have meetups at the studio, focus groups, and then a lot of times when we get together at various places around the world. And it's something that we created. I never knew it was going to be this this powerful, but it really is. And you can become a member and see what's behind the scenes right now in about 30 seconds. You know, we give a free 30-day money-back guarantee. So if you're not 120% satisfied with the entire experience after 30 minutes, we refund your money. So there's really no reason not to come check it out now. When you're in, send me a private message. I've got time for everyone on the Academy always. So if you have any questions, just hit me up with that. And I really think you're going to enjoy it. So definitely go check it out. And now I'm going to leave you with the man himself, Andreas, the king of Bitcoin. London Real Set Design by Timothy Olton. This is London Real. I am Brian Rose. My guest today is Andreas Antonopoulos, who is a technologist and serial entrepreneur who's become one of the most well-known and respected figures in Bitcoin. You are a 3-time guest on the Joe Rogan Experience. That's 2 more than me. And in my opinion, you are the best in the business when it comes to understanding and explaining Bitcoin and cryptocurrencies and their implications on the future. Andreas, welcome finally to London Real.
I'm so excited to be here, finally. Thank you.
I know, I think we've been trading tweets and DMs for a year.
Yes, absolutely, yeah.
You know, I think I first heard about you talking about Bitcoin on one of the first Rogans, and you went back 2 more times. And, you know, immediately when I heard you talking about it, I was like, you obviously know what you're talking about, and almost more importantly, you can relate to almost anyone, you know, what a cryptocurrency is, you know, what Bitcoin is. And I want to jump into all that with you, but before that, I wanted to just kind of tell you my relationship with Bitcoin. We started talking about it here, I think in early 2013, maybe March or April. And I put out a tweet saying, you know, who should I talk to about Bitcoin? And a bunch of people came back and were like, Max Keiser. And so then Max and I started having this Twitter battle. And I was just like, who's this guy? And I watched him on an RT, and I was like, this guy's obviously out of his mind. And then someone would come back, and they're like, no. And then Max and I started tweeting, and he's like, I don't think the London Real guys can handle Bitcoin. And then I remember I said something like, I don't think Max is our guy. Will the real Slim Shady please stand up? And then Max and I traded a few emails, and he was like, when and where? And I was like, Shoreditch, Friday at noon. And he was like, fine. And I thought he was going to come in. I thought we might get into a fight. But we didn't. He came in. We had this epic episode we called Bitcoin, Bernanke, and Buffett. And Max kind of did his whole thing. Since then, I had a relationship with Max, and we got along really good. And funny enough, later he was at my house for Thanksgiving, November 2013. And we had a trader, a city trader at the table, and he almost ended up buying a Bitcoin from Stacy, Max's wife, for about $1,000 then. Maybe it was like $1,020. And they almost transacted in front of us, like city traders like to do. And you know, that was kind of my start with Bitcoin. I'm sure you remember those days of 2013.
Yeah.
I was wondering if you could tell the people, you know, how you got started with this relationship with Bitcoin, and what is your relationship? I know you travel around the world talking about it, so can you tell us a little bit about you?
So I started, first of all, my background is in the space. I'm an insider, meaning that I'm a computer scientist by training. I'm a graduate from UCL here in London, in fact. And in the, I guess, early to mid 90s, I got my graduate degree, a master's degree in distributed systems networks, and I focused on security. So systems that use networks to decentralize control were my focus way back then. And of course, at the time, that was mostly the internet.
Right.
But at the same time, back in the early 90s, we started seeing the first applications of cryptography and currency with DigiCash, which was a system developed by David Chaum, who's essentially the grandfather of digital money. And then over the years, several other attempts. Now, I was always interested in that as an applied area of cryptography and distributed systems. But it kind of faded from my interests. A lot of these early things tried and then failed. And one of the reasons they failed is because there was a single company. And as soon as that single company gained some traction, someone somewhere around the world would get very annoyed and stomp on them.
Right.
So centralization was the weak point.
Right, which was a story in a lot of technologies
Right.
before the internet came around.
Yes.
Right.
So fast forward, I worked in security. I did a lot of work around networks and data centers and distributed systems and security. I worked for a lot of banks, not directly as a consultant, doing various projects, various payments networks, data centers, things like that. And then the financial crisis happened in 2008.
Yeah.
I had become quite disillusioned, but I was still working for banks because they were the only ones who had money.
Yeah.
Sometime around the middle of 2011, while I was doing other things, completely absorbed, I was running a company, I was a partner in an analyst firm. I had 17 employees in the firm. So, a startup right after the crisis trying to survive, pretty busy. I read something about Bitcoin, and I think it was related to gambling at the time, or because the US had passed a law against online gambling. And a lot of these sites had migrated abroad, and then payments became an issue, and a lot of them had started looking at Bitcoin as an alternative mechanism. So it was something like that. And so I wasn't interested in gambling, and therefore I missed it. I read about it, I was like, nerd money for gambling. Just ignored it. 6 months later, I read another article right at the beginning of 2012, and this time, for whatever reason, I went and read the Satoshi Nakamoto white paper. I wanted to read the original scientific paper to understand what this was, because the fact that there was a scientific paper behind it made me think maybe there's something more to this than simply, a flimsy system of money. Maybe it's something kind of like DigiCash. Maybe there's been some advances in cryptography. I read the paper, and halfway through the paper, it just went boom in my head. Like, okay, first of all, this isn't a currency. It's a network. Secondly, it's a network that solves distributed consensus. This is huge.
Right. And for people that don't know who Satoshi is, can you explain?
So Satoshi Nakamoto is the creator of Bitcoin. He took, or she took, several different technologies that existed at the time and created this combination that provides the fundamental innovation behind Bitcoin, which is the ability to have global consensus on a distributed ledger without any third party, without any central authority, without any center of any kind. The first completely decentralized form of trust that is based on network. The first network-centric trust platform.
Right, which is a very important concept. So right away, you didn't think currency, you thought this is a network.
I read currency, but then when I see how it works, I realize, well, in this case, it's much more. And the reason it's much more is because if you just flip it around and think of it from a different perspective, currency is almost like an app. Like, you have a decentralized trust ledger where you can record the ownership of something. Well, the most obvious something you can record the ownership of is a system of digital cash. But that's not the only thing you can record ownership of. And so once you read that, you're like, okay, you've done digital cash, but if you have this building block, you can make so many other things. You can register assets, real estate, do governance, voting. The list is endless.
Is this the blockchain?
This is the blockchain and its decentralized consensus mechanism behind it.
Okay. Which is maintained by people who then do the mining of the Bitcoins.
Yes.
And that's kind of how it's paid for in a way.
Right. The easiest way to explain it is this. If you are introduced to the internet in 1992, you may make the obvious mistake of assuming that email is the internet. And for a very long time, email and the internet are indistinguishable. And it's not until 95 that the web comes along. And when you have two major applications on the platform, that allows you to see the platform. Until then, when there's only one application, you confuse the application and the platform. Bitcoin, the currency, is email. It's not the real invention. It's the first application of that invention. So Bitcoin as a whole is not just money for the internet. It's the internet of money. And currency is just the first application on the internet of money. And there is a whole set of applications that we can build on top of that. So when I read the paper, that's what I started realizing. This is a platform, and on top of it, you can build decentralized trust mechanisms, and currency is the obvious first application. And that alone is huge. Don't get me wrong, it's absolutely huge, but it's not even the beginning.
Right. And so this is 2012. You read the white paper. What was your next move to get involved?
I went into a fugue state for 4 months. I dropped everything.
Is that like a cocoon state?
It's almost a disassociative state. I would get up in the morning and read everything I could find about Bitcoin, run code, program, digest code, read more papers, read conversations, try to understand it deeper, look at my watch and it's midnight, I haven't eaten anything, go to bed, wake up at 8 o'clock in the morning, start again, 18 hours a day for 4 months, just unable to do anything else.
Is that an obsession?
A complete obsession.
Okay.
To a point where this is not healthy, right? I lost 26 pounds in 4 months. Not because I was dieting, but because to eat, I had to stop reading. And
at that point, were you an expert in it?
I'm not an expert today in it.
Okay. What did you learn in that 4 months?
And the reason I say that is because it's a never-ending journey of discovery. You scratch the surface, you find a layer, you dig, you find another layer, you go deeper, you find another layer. It opens up new opportunities, new possibilities. You start experimenting with those, you open up another layer. And while I'm doing that, Bitcoin itself is evolving.
Right.
Bitcoin today is not Bitcoin of 2009. It's growing, it's evolving, it's developing new capabilities and features. And so I'm absorbing as much information as possible, but the information itself is growing at the same time. So while I do know a lot about Bitcoin, I will never know everything about Bitcoin.
Right. And just like the
great.
internet, the applications, the way people are using it changes every month. So there's all these new iterations.
Right. You can never know enough. There's never the end of the internet.
To me, it seems that Bitcoin suffers from a bit of a marketing problem. And if it was ever to be done again, it could be attacked from a completely new way. Because as you said on one of the Rogan shows, people know it as being associated with drug dealers, terrorists, and pornographers, which is also true about a lot of new technology, VHS.
Every new technology.
The internet. Okay.
Every new technology.
Right.
Well, why is it that criminals become early adopters of technology? Because they face the highest level of friction in the marketplace. Because criminal enterprise is the least efficient form of enterprise. And therefore, you have to use it's the most brutally competitive, and you have to use the most cutting-edge technology. Criminals were the first to use cars, the first to use phones, the first to use electricity, the first to use every single technology. Fire was probably first used by a criminal.
Because they need it for their business, because they're on the cutting edge.
Because by necessity. And that's not saying that's a good thing. That's just a simple recognition of the fact that when you have something that solves problems, it will be applied in the areas where friction is highest. And the places where friction is highest is usually related to illicit activity, because the friction is imposed by society to stop those things from happening, right?
Okay.
And so, of course they do. Of course they use them. But that changes very quickly, and it changes in every technology, because as the adoption spreads and it becomes more mainstream, the use of the technology changes to reflect the user adoption, to reflect the society and the culture that's adopting it. Right. So, today the internet is used predominantly to post videos of cats.
Still?
It's an enormous industry and will continue to be, the petabytes of cat videos. But the point is that the vast majority of people use the internet to do perfectly normal social interactions. And Bitcoin is already morphing into that.
But it started off with being associated with the Silk Road and these kind of places. But a lot of people, their first contact with it was something like that.
Yes,
correct?
And of course, not only there is some association with that, but then of course that is the only association the media wants to write about, because it generates clickbait headlines and eyeballs. So
would you argue that some governments would prefer that association as well?
Oh, they've been actively promoting that association, and they're quite gleefully they're quite gleefully piling on the propaganda, because that allows them to really try to stop something that feels uncomfortable, that is change, that represents a threat.
When I read the account of the Dread Pirate Robert being arrested, who was as far as we know, one alleged to be the creator of the Silk Road, or one of the many creators. When I read about it and read about the hit that he apparently put out in Bitcoin, for me, being in the media, I just thought, I can't even believe 20% of this. Just because it sounds like it's such in the interest of the US government or governments worldwide to make it look bad.
Well, we now know that some of the most nefarious activity occurring on the Silk Road was by the two DEA agents, who have now both pled guilty and are facing very stiff sentences for not only stealing money, but of course the actual hit was orchestrated by a DEA agent, a rogue DEA agent.
Oh, to incriminate or just for his own reasons?
He stole more than $500,000 from the Silk Road for his own pocket.
Okay. So that story is already being discounted.
Well, it's not being discounted. Well, Ross Ulbricht is in jail, regardless. But in the end, the most nefarious, most corrupt character in all was a drug cop. No surprise there.
What's your read on all of that? What's your read on the closing of the Silk Road, all of those pieces?
I can't comment on the case itself or the closing of the pieces, primarily because I had some involvement as an invited expert witness on the side of the defense to provide expert testimony about some of the evidence, and that's still pending in appeal, so I can't talk about that. However, I think it's important to understand the motivation behind why was the Silk Road so popular? Why does an online marketplace for drugs gain traction? And why is it that the day after the Silk Road was shut down, 20 more appeared in its place? And when those were shut down, 20 more appeared in their place, and they're proliferating. Why is that? And there's a really simple answer to that. You can't get stabbed over TCP/IP. And so if you're involved in a drug addiction, if you suffer from addiction, and that is a health issue, not a law enforcement issue. And we don't treat it like that in our society. The problem is that the worst part of a drug addiction is that you also get exposed to this enormous risk of violence because you have to engage with a black market and with street criminals whose only reason for existence, or the function that makes them exist, is the fact that because the substance is illegal, it makes it extremely expensive and fuels this enormous black market. Just like Prohibition created the mobsters in the United States, and organized crime blossomed under alcohol prohibition and created enormous amounts of corruption. The black market in drugs and treating addiction as a law enforcement issue instead of a health crisis causes corruption to blossom, causes corrupt DEA cops to be soliciting hits, causes all of this violence and cartels and things like that. So for the people who are addicted, who arguably are victims, right? We may see them as criminals in some case, but effectively they are victims.
And they weren't all drug addicts. I mean, they would sell marijuana, they would sell psychedelics and other types of drugs. It's not necessarily the typical Class A addict that was online.
Well, those distinctions are whitewashed, absolutely. In fact, the majority of it was that. They also sold cigarettes because they want to avoid the tax, and they sold alcohol because they want to avoid the tax. So many of the addictive substances. But the bottom line is that for addicts, the real issue of violence is solved by an online marketplace, because now you can't get stabbed over a website. And that's why these things are popular, because they address one of the fundamental problems with black markets, which is violence.
Right.
That doesn't mean I'm endorsing them. I'm just looking at the realistic issues here. And so
we had a guest on named Jamie Bartlett, who wrote a book called Inside the Digital Underworld. He's a British guy. He's fascinating. And he went into the Silk Road and found out it was one of the best peer-reviewed, accountable marketplaces there were. And from what I hear, that's true. It had a lot of feedback. It was kind of the Amazon of that, and you could get some of the best quality and the best repeated business out there. So not only did you save the violence, but you actually ended up getting a great product and great customer service.
Absolutely. In fact, one of the interesting things about it is that it used escrow services, meaning it would take the funds, put them in a controlled account, until the buyer and seller could agree, like eBay does with PayPal, right? And allow for dispute resolution. Essentially what that is a contract-based solution to what is normally addressed with violence in the black market, right? You don't cheat your dealer and your dealer doesn't cheat you because someone's going to get hurt.
Right.
And when you solve that with essentially a smart contract, a technological solution, it makes for a very efficient marketplace, just like it does on eBay. If you go into a black market to buy a secondhand television and you're dealing with unscrupulous people, you could be resolving that dispute with violence, but instead you use eBay and PayPal and dispute resolution to do that. And there's nothing different when the product is narcotics, it's just that the chance of violence goes up. So the Silk Road actually it offered solutions to a market where there was demand. We have to accept that and understand why that is the case. And obviously, my position is that what this points to, which I think a lot of countries are beginning to realize, is that these things need to be treated as a health crisis, not as a law enforcement issue. Because in the end, you can't solve the health crisis, you only end up corrupting the law enforcement.
Right. Do you think overall the Silk Road helped the evolution of Bitcoin, as in showing that there was a real need and real people were using this thing, even getting the word out about it?
Sure it did.
Okay.
Absolutely.
So
I have to acknowledge that.
Right, okay. So not necessarily a bad part in the history, maybe a necessary step.
Well, it did enormous damage to the reputation of Bitcoin. And in fact, the closure of the Silk Road and the continuation of Bitcoin beyond that helped enormously with the reputation of Bitcoin. But certainly, a lot of early technologies, they find their early adopters in whatever niche they can find their early adopters. The internet grew up on pornography. We can pretend that's not the case, but that is the case. That's what drove the early internet. And now it supports an enormous range of economic activity and helps every aspect of society. But yeah, that's its birthplace. We have to accept that's the truth.
Right. You told me earlier that you posted your first video on YouTube about Bitcoin. I think it was April 2013. Mm-hmm. We're 2 years ahead, maybe 2 years and a quarter. What's your life been like the last 2 years, and how has the life of Bitcoin kind of evolved since you first started talking about it? What's happened?
Well, I decided early on that one of the skills that I had in my career long before Bitcoin was public speaking. And I've been doing a lot of teaching and explaining technology in terms that are simple and easy for people to understand is something that I've been doing my entire career. So when I was looking at Bitcoin and thinking, well, I can code, I'm a programmer, but I don't have the production skills to code every single day or the time, and quite honestly, I'm not that good at it. There are far better programmers than me, of course, in Bitcoin. I don't want to necessarily invest in Bitcoin. I'm not going to be able to be a serial entrepreneur as much as I like, but I have this one skill. So what I want to do is talk about Bitcoin and help explain it to people. So I started doing that. And I started contacting journalists and TV stations and local media and conferences and saying, listen, you wrote an article about Bitcoin, it's got some inaccuracies, maybe I can help you, here's a few comments. Next time, I'd be happy to give you a comment. And gradually started building that in order to help better explain it, to cover misunderstandings and things like that. And then suddenly it just snowballed on me. And I had no expectation that it would, but so I post a video on YouTube and it would get 250,000 views, and I was just blown away. And so after that, it's been a complete roller coaster, whirlwind, worldwide ride of craziness.
Right. Now, the value of Bitcoin has gone up and down. We talked about it in 2013. It was up, I think over $1,000. You can probably tell me exactly. As the value of a Bitcoin goes up and down, and I'd love for you to explain the ramifications for that and the finite number of Bitcoins and how that makes a difference or doesn't. How has the interest in Bitcoin, does it track with the price?
Yes.
Okay.
It
And
does.
but whereas
Which is so frustrating.
right, because it's illogical that it should.
Because
right?
it's illogical, and more importantly, the price is the least relevant or interesting part of
Exactly.
Bitcoin.
Can you explain that dichotomy to people? Because a lot of people would say, "Oh, that makes sense," but if you explain it a little bit better, you understand that it doesn't really make sense.
Well, think about it this way. In 2000, 90% of all internet startups went belly up. Almost $1 trillion of value was destroyed. And that was the internet's best year. Why?
Biggest year for growth.
Because that's when you started really seeing the web take off, and the utility and adoption all hit these inflection points with the real explosion in mobile, the beginning of smartphones and mobile internet. The web had finally taken hold and was beginning to get serious attention from business, and all of the first generation internet startups blew up. But what really happened is in the last 2 years of that bubble, the internet became entrenched in everybody's life. 2000 was simultaneously the internet's death and its rebirth. And so, but that is capitalism. That process of creative destruction and rebirth is the process that creates tremendous innovation and attention for things. Bitcoin has now gone through 4 bubbles like this. And in fact, everybody knows about the November 2013, went up to $1,000, crashed down to 230. We're at 270 now.
Yeah.
But what people don't know is that that's not the biggest bubble Bitcoin has ever had. 2 years before that, Bitcoin shot up to $30 and crashed to 25 cents. And in relative terms, that was a bigger climb and a much bigger drop. And it took almost 2 years to recover from that. And that was its second biggest bubble, because the really big bubble was when it went from 1/1000th of a penny to $1.
Right.
And at $1, that was the real birth of Bitcoin, because parity was almost considered unattainable. The dollar per Bitcoin was like a holy grail dream.
Right, because it started off as worth basically zero in an idea.
Absolutely. And the idea that you can bootstrap a global currency from nothing was in itself a ridiculous idea. So when you hit dollar parity, you've proven that you can bootstrap a global currency from nothing, and that's never happened before. To then say that the Bitcoin is dead because it's at 260, if you go back, the idea that it could ever reach 260 was insane. And by the way, we're not done. We've got at least 3 or 4 more bubbles.
Right.
Bitcoin is not going to now be steady, because every time attention shifts back, it blows another huge rise. And because there's not enough to sustain that rise usually, it will then revert and crash down again. This is a roller coaster. It's going to continue to be a roller coaster for 3 or 4 years, just like the internet was. The big difference? The internet didn't have a single stock price that everyone could pay attention to. So it's both a blessing and a curse.
Right.
It's a blessing because as an investment vehicle, by attracting people to speculate on it, it's generated a lot of attention when it goes up. It generates a lot of investment in Bitcoin companies, and a lot of the early Bitcoin millionaires, if you like, were able to reinvest their Bitcoin into startups. But at the same time, double-edged sword, every time it crashes, someone writes an obituary for Bitcoin. They're like, Bitcoin is now dead. By the way, there's a site called bitcoinobituaries.com where you can read 150 obituaries written since 2010, all of which are not true. And I'm guaranteeing you there are going to be 2 to 3 more years of obituaries being written about Bitcoin.
Right. Just to square a few things away, how many Bitcoins are in existence? How many will be, in the end, how many will exist? And why does that ultimately not really matter? Because we're really talking about the whole market capitalization, and since it's divisible infinitesimally or not, can you just explain that whole concept, or even if I'm getting it right?
Yeah. So Bitcoin is designed to simulate precious metals. And the only reason that is relevant is that from an economic perspective, it produces an effect called scarcity, which means that the token itself is rare. Now, this is a contradiction in terms. A digital token, which is infinitely copyable, cannot be rare. Bitcoin is the only digital token, the first digital token that was able to be rare. And that was a huge achievement, and that's essentially the Nakamoto invention. But In order to make sure that that scarcity was guaranteed by the system, there are a set of rules built into the Bitcoin mechanism that regulate how often Bitcoin is created and at what rate it is created. And there's less Bitcoin created all the time. So it started off at 50 Bitcoin every 10 minutes back in 2009. Then it went to 25 Bitcoin in 2012. In 2016, it's going to drop to 12.5 Bitcoin every 10 minutes. And then it continues to divide by 2 every 4 years until it peters out and stops. And then whatever amount of Bitcoin has been created, that's all the Bitcoin that's ever going to exist. Now, this is very similar to how gold works. If you were part of the California gold rush, you could trip over a boulder and find a nugget of gold like this. Today, in order to extract gold, you have to strip mine 100,000 tons of raw gold to get an ounce, right? And so that's how the extraction or the process of diminishing returns has happened in physical metals. And we don't know how much gold there is in the world, but what we do know is that it is a finite quantity and that we have already extracted 98% of it. That we know.
Right.
Because we can watch the returns, and if you draw the line, it meets the bottom at some point. Right.
And there are Bitcoin miners that put entire server networks and data centers in order to produce those Bitcoins, and
But they can't change the rate of issuance.
Right. Okay.
That is fixed by the network.
Okay.
All they can do is compete for that small share of Bitcoins that come out against everybody else by increasing their contribution. And what they're doing is they're securing the network. So they compete to make the network more secure, and the group that's producing the most security for the network gets the biggest percentage of the share of Bitcoin that exists.
And that's how they get paid.
And that's how they get paid.
And that's the fascinating invention of this, that it really is the fascinating invention of Bitcoin and the blockchain.
Well, the real invention is the ability to agree on what the state of the ledger is worldwide.
Okay.
Mining is the way you secure that agreement, and the reward is the way you make sure mining happens. People often see this the wrong way around. They assume that the purpose of mining is to create Bitcoin. And the purpose of mining is not to create Bitcoin. The purpose of mining is to secure the process of consensus to agree what's on the ledger. The creation of new Bitcoin is just a way to reward miners so that you can make sure that the security happens, so that you can make sure that you have agreement on the ledger, so that you can make sure you have secure transactions. Okay. So these other things are secondary effects. Approximately 14 million Bitcoin have already been mined. There will only ever be just short of 21 million, so 20.999999997 million Bitcoin will only ever exist. However, the unit itself is pretty arbitrary. Why 21 million? Why 1 Bitcoin? Why 25 every 10 minutes? It doesn't really matter. Right. You can subdivide these to 8 decimal points. So each Bitcoin has 100 million smaller units called Satoshis. You can describe Bitcoins in thousands of a Bitcoin, hundreds of thousands, millions of a Bitcoin, or down to hundreds of millionths of a Bitcoin, which is a Satoshi.
The hardest part of your job, I would guess, is to describe it to a normal everyday consumer who knows dollars or pounds or euros. They know they go to the market to buy X, Y, or Z.
Right.
And then you're telling them that, look, there's a Bitcoin, it's currently worth $270. It might go to $27,000 in the future, but that doesn't matter because the whole idea is that Bitcoin is a technology that you can use to just process payments. Is that the hardest part of what you do?
Well, it is, but part of that is because what I'm trying to describe is currency as a medium of exchange works best when it hasn't got too much volatility. So when it's relatively stable. And that will happen with Bitcoin, but it won't happen yet. So you have to look at it and understand where it's going. And we can see the volatility has been decreasing steadily across its entire lifetime. In fact, for the last 6 months, has been trading between $220 and $260 each, and moving in a very narrow band. The euro has been more volatile at times than Bitcoin. The difficult thing is that most people trade in only one currency. They only exchange currency when they go on holiday. During the time that they exchange currency, it stays within a very narrow band, so they only have to do one calculation to figure out the exchange rate. Foreign exchange traders understand what we're talking about. But
any trader understands that they love volatility or that can be used. But your average consumer, unless they live in Brazil or in an economy where there's been massive inflation in their lifetime.
It's too confusing.
Yeah, and they don't have to, they've never dealt with it except when there's a
Right.
scarcity, an oil crisis or something.
Well, so here's the other thing. If you use Bitcoin primarily as a means of exchange and not a store of value, which means you buy and sell things with Bitcoin, most of the time you take Bitcoin in, you give Bitcoin out. And because that transaction happens relatively frequently, you're not affected by volatility. I get paid in Bitcoin and I paid my bills in Bitcoin. I'll get paid this week. And then 2 days later, I'm going to use that Bitcoin to pay for plane tickets. And then 2 days after that, I'm going to use Bitcoin to pay for a hotel. And in those 5 days, the price didn't change enough for me to really notice any difference. And so volatility really affects you over longer periods of time. And if you just have money coming in and out, you don't really notice it.
Right. How much of your life can you live on Bitcoin?
Not much,
Okay.
but enough.
But you can buy plane tickets and pay your rent.
I can't pay my rent. I can buy plane tickets. I can buy hotel rooms. I can buy consumer goods, electronics. Through gift cards, I can buy gasoline. I can buy anything on Amazon. There's a lot of things that you can do. It's by no means convenient. So this is exactly the same as asking in 1993, how much of your shopping can you do over email or e-commerce on the web? Well, for e-commerce on the web is much later. Or how much of your communication can you do over email? Well, the answer is not many people had email at the time, so you couldn't, right? It takes time for that adoption to reach a level where it's seamless and comfortable for all consumers. Bitcoin is not something that anyone other than early adopters is going to just grab and start using today. It took 20 years from the day I sent my first email until the day my mom sent her first email. I sent my first email using Unix command line skills in 1989. My mom could not use that internet. 20 years later, she went like this on an iPad screen and sent her first email. She could use that internet. Bitcoin is 6 years old. We've got a long way to go until we can make it easier to use and easier to secure, but all of that potential is right there. It exists today, and it absolutely refuses to die. It refuses to go away. It's this incredibly resilient, relentless anomaly. And by the way, we now have this wonderful marketing coup. Bitcoin? Well, if that has a bad reputation, let's now call it blockchain. It's really funny because this transition happened primarily by banks that wanted to get involved in the technology, but they didn't want to use the word Bitcoin because of its connotations. So they started talking about the underlying technology, and they started using the word blockchain. Now, blockchain is what gets you the investment money. Blockchain is what gets you the attention. But turns out, the only functional large-scale blockchain we have on this planet is Bitcoin. And the only way you can make an open, decentralized, global, transnational blockchain, which is really where all of the excitement is Bitcoin. So we just changed the name halfway through.
Right.
If we had done it on purpose, it would be considered a genius marketing coup. Right. But in fact, people did it because they simply couldn't, they were uncomfortable with the connotations.
It's a huge marketing issue. So many startups are a big marketing issue, and digital products are. A year ago, is PayPal accepting Bitcoin now, or can you transact with PayPal?
Yes, they have under some merchant programs, you can use Bitcoin directly on
and
PayPal.
Uber is being rumored to be taking it, but I'm guessing we're not expecting that.
That wasn't, yeah, that rumor was debunked pretty quickly. There's a lot of complexities but the sharing economy, quite interestingly, is a great opportunity for Bitcoin.
You expect that to take off before the retail does, right?
Yes.
Okay.
But more important, actually, the thing I expect to take off first in Bitcoin is very cumbersome cross-border transactions, and there are three categories of that. The first one is companies that need to pay suppliers, subcontractors, and partners all across the world. Google has 20,000 affiliates they need to pay every month. Many companies have outsourcing partners, sales partners all over the world. Travel and hospitality companies, airlines, et cetera, parts companies, automotive companies. And these cross-border transactions are horribly expensive, very slow, extremely cumbersome. They have huge overheads and friction. The second one is basic import-export. If you're doing transnational trade, then using a transnational currency actually makes a lot of sense. There are disadvantages with the dollar. There are disadvantages with traditional wire transfers that Bitcoin solves. So it's practical. And then the really interesting one for me is foreign remittances. There are maybe 100 million people who are working as immigrants in developed countries, and they send $560 billion home every year through companies like Western Union and MoneyGram and things like that. And for that, they pay 9% as the average fee, netting Western Union a really handsome profit.
It's shocking.
It's absolutely shocking. And a lot of that has to do with political constraints more than anything else. But that is an area where Bitcoin can not only have an immediate technological impact, but that impact translates into an enormous source of income for some of the poorest people in the world. Now, to put that into perspective, the $175 billion that goes to fees in the international remittances market is larger than the entire foreign aid budget of all of the world governments put together.
To watch the rest of this fascinating interview, click on the link below and go to londonrealacademy.com. There you can sign in with your social media login and watch the rest of the episode for free, along with all of our episodes on London Real, my webinars, and all of our premium content, all located over at londonrealacademy.com. So click on the link below. You'll be directed there, and you can watch the rest of this fascinating interview, and I'll see you there.
Impact on poverty. So these statistics are where we said banking services, banking services, like I mentioned.